Sorry for the delay, folks. And we are live. So yesterday was a kind of a mixed signal, but I did actually end up jumping in there and putting on a short position in the VXX. So, right now it's kind of strange. We have the market up with the VIX and VIX futures up. Well, we have the VIX down just barely and VIX futures up, but there is just so much kind of like edge in this VIX complex right now, and I think it can be interpreted in one of a couple ways. One of the ways is just that there's nervousness around the market. There's buyers coming in. If you looked, can you guys hear me? If you looked at the time of sales, you would see buyers of options in the S&P. You also see the Russell right now down on the day. Russell kind of bouncing off of resistance up above, right? And so you've got these major indices sort of stalled out. We had really weird action this morning before the open. If we look at the NASDAQ, it was bouncing all over the place. As I usually do, I woke up in the middle of the night and was looking at what was going on early this morning, and you had, everything was looking good, and then we had the sell-off. I rolled over and I looked, and all of a sudden the NASDAQ was down 50, but came right back, and we seem to be hovering. It seems like you can do no wrong being long this market. I was talking to a guy, or actually I was looking on Facebook and Twitter. There's a guy on Twitter that was long like 10 Tesla calls. I mean, people, it seems like such an easy way to make money in this market. All you have to do is buy Tesla and you make money no matter what. And I know it's tempting to go out there and just get long a Tesla or an Apple, but it seems to be a no-brainer lately that that's how you make money. Imagine if you just, as soon as they announced the split in Tesla and Apple, you just put all your resources into buying like out-of-the-money calls or something. You would be a huge winner. And it makes it appear like it's just so simple how to make money. You just get long and you make money. That's what's been happening lately, right? Now, that isn't destined to continue forever, but for the time being, that seems to be the thing. Is just you just get long the market and you make money. So what did I end up doing? Well, I ended up buying these put spreads in VXX. I'll show you here. I bought these December put spreads in VXX. So you can see it here. I'm long the D's 2420 put spread. And I like it. We have 119 days till expiration. Now, if you just do quick math, let's see if we can find it here. So I paid so it's showing me paying $2.42 and $2.41 for this put spread. It's a $4 put spread. It can be worth $4. I paid $2.41 for it. So if you were to just do quick math on the Contango we have right now, and Contango has actually expanded even more since we last talked. Now we're up to 12.64%. Hey, what's up, guys? So sorry that I kept people waiting. It's a family thing, but I apologize. So 12.64%. Okay, that's the Contango here. And it's just due to this election thing and whatnot. But regardless of what it's due to, just look at the numbers. 12.64%, the beginning of the expiration cycle. If this can stay at 12% for 1 month, that means that we are going to get essentially $3 in decay in UVXY, VXX, these products. 1264. If you multiply that by the current price of VXX, let's say 25, you're going to get over $3. So when you're sitting here in front of the screen and you're just looking at VXX trading, it doesn't appear like, oh, that's edge or whatnot. But the reality is, over a month time, $3 an edge to the downside is a lot of edge. That means if the VIX stays right here, everything remains the same. This will be $3 lower at this time a month from now. So it'll be 21.74. In the meantime, and on top of that, that's one aspect of this trade. The other aspect of this trade is just that you've got these futures that are way above spot. Now, the Contango part deals with the curvature between these 2 points, the SEP future and the OCC future. The other part of edge, though, that really is humongous has to deal with the fact that these both are way above the spot price. So you've got the spot price 22.87. Let's call it 23. And we could call this 26. So we've got 3 points between the spot and the front month future. Okay, that was 4 points just 2 sessions ago, but 3 points now, huge number. And like on a day like today, it doesn't seem like that much because you've got the VIX slightly down and these products slightly up. So you're like, whoa, what am I losing because the VIX is down and these are up? No, you just have to be patient. Any trade you put on, essentially, it's not gonna that day just make you money and take it off unless you're taking a huge risk. And a trade like this with the December is not a huge risk because if there's a spike, you've got over 100 days for it to come back down again. So we're only 3 days into the expiration cycle, which means that UVXY and VXX are made mostly of this future here, but every day it starts to rebalance towards the second future, and thus the average price that you're at right now, the average price we're at comparing the futures to spot is like around 26. But as we move out, it starts to inch up. We're moving down along this line. Let me get my little. Should I get my little pen out here? Let's see if I can do this. I guess I'm not set up with my little pen here. But if you just imagine yourself moving right along this line, and you can see the slope of this starts to move up. And so every day as we rebalance, we're moving up and away from the spot price, but there's pressure for these to converge all the time. So, excuse me. So that is what creates the push to the downside on this. So unlike a stock where it could go either way, there's pressure on this pulling it lower all the time. So that is kind of where we are right now, and it's just been almost too rich for me to lay off. So finally I'm back involved. So if I were to look at my deltas here, it shows me short 373 deltas. So essentially what that means is, as I'm sure most of you know, VXX, every dollar it moves down, we make $373, and every dollar it moves up, we lose $373. And this decay, it shows us losing $15 a day. That basically just means right here at this moment, it's costing $15 a day. Remember, when we look at a spread like this, the 24-20 spread, if it was expiration right now, we'd lose all the money that we invested in this, right? Because we are above 24 right now. We're 24.77. So if expiration was right this moment, we'd lose all the money we invested. So you want to try to just keep that in mind when you're dealing with any sort of spread. However, if this was to go down to like 22, then the intrinsic value of the spread would be $2 because it's the 24. We're long the 24 put, and $2 below the 24 puts the 22. So the spread, if we were trading 22 right now and we expired it would go out at $2. But right now, if expiration were right this moment, this spread would be worthless. If expiration were today, this spread would be almost worthless, but the pricing is based on the chance that we actually could go through here. Now, the likelihood, if expiration were today, of us getting below 24 is not very big. So probably this spread here, the 24.20, if this was expiration day, would be worth very little. Well, we could actually go look. Let's go and switch to the one that expires today. And if we look at it, indeed, look, it's got the 24 put offered at 2 cents. So So the whole value of buying the spread is the time that we have, and knowing that this stuff is decaying by 3 points per month right now. Well, if you wanted to do quick math, 119 days, you could say, well, how many months is 119 days? Well, if it was 30 days, it would be 1 month, right? 60 days, 2 months, 90 days, 3 months, 120 days, 4 months, right? So if you multiplied 4 by the amount of decay, now it's going to be less decay as this moves lower, but just on a rounded number, if you multiply 4 times $3 a month in decay, that's $12. So that would mean VXX down $12. But you know, as it moves below 25 each month, it's going to be less. So it might be $3 for a $25 stock, but once you get down to like, you know, the first month, okay, now it's a $21 stock, so maybe it only decays by $2.70. And the next month, you know, now it's down a couple more bucks, and it's going to decay less. But just for a rounded number, if we said, okay, 4 months, $3 per month, $12, 25 minus 12, and you've got this thing almost halving in price over 4 months. And that is the cumulative effect of Contango. Now, the questions that confront us are, A, is there going to be some sort of vol spike soon? B, does Contango stay at 12%? Because remember, when we look at our chart, the current chart is only showing Contango for 1 month, right? It's only showing Contango for 1 month. Now, we don't know what's going to happen after the election. My contention is probably what's going to happen after the election is everything's going to move down like 5 points or something. But that is an unknown. But usually what happens if there weren't an election is as we get closer to expiration, well, now the curve starts to switch, and this month starts pulling down. And then the next month, essentially the curve will look the same as it does now, but with October and November being the front months after a month. But what is expected, I would say what's going to happen after the election is we might get a big move one way or another, but regardless, volatility probably will come in. We don't know how much, but it will probably come in. So that's why like extrapolating too far out on this Contango stuff doesn't make too much sense. But we know that currently right now this stuff is decaying massively. And we also know that the administration doesn't want to mess with the market too much coming into the election. So so what is our exit strategy for this particular trade? Well, I think for me, you know, if I was able to make a couple points on this, I'd probably just get out and be happy with it right now. But, you know, there's a lot of pressure to the downside here once again. And so you might think, yes, the market's very toppy. This is a good time for the market to move lower. And all those things may be true, but you have a lot working against you. Even if we did get a down move, it would have to be pretty significant to counteract all these forces that we have going our way, being short this stuff right now. VIX Central seems stuck. Let's take a look. You know, he runs it off of the SIBO feeds. All right, so let's take a look. All right, so I have the front month future on my live feed as 26.16. VIX Central has 26.10, so that one seems right. Second one I have 29.52. This one has 29.40. I have spot. Yeah, it might be a little delayed. Let's see if we can find another one. There's some other sites here. Let's see if I can find another site with it. Do you have on your hold on 1 second. I have too many screens open here. Do you have some other way to look at futures besides VIX Central? I guess that's the question, because here we go. Dasbov, do you have a different spot that you can look at futures? Can you look at it on Thinkorswim? Because for me, once again, this Contango stuff, it's all a long-term thing, right? So to me, considering whether I need to see it updated every 15 seconds isn't that important to me right now, because I know that what the general shape is going to be for some time. And here's the futures. I have these futures which do appear to be updating in real time. Just you can look on the left side of my screen here. I'll blow them up for you a little bit so you can see them. But it doesn't appear to have moved all that much. Let me blow them up so that you can see them here. And there are some other sites also that have the term structure, but I can post those after I do the video. I just don't want to waste too much time. I've already wasted enough of people's time today, but so here's the futures right here in real time. I mean, you're delayed by what, 5 minutes or something like that? Or I'm sorry, you're delayed by like 15 seconds on this feed. But we've got the VIX down 12 cents. Front month future 26.15, second future 29.50. Now it is kind of strange, right, that once again with the E-minis up, that VIX futures are staying firm. But that's got to mean that there's buyers out there. So what I like to do is I go to SPX and I check and I see, all right, what's the biggest trades in the SPX today? Let's see what's going on. And usually when you see the stuff firm, you're going to see, oh, well, there's buyers. So hard to decipher this because it looks like it's mid-market. Let's see what some of the biggest trades are. So we've got March 900 put buyer. That's strange. Way out of the money put buyer. Not a whole lot of big paper here. So it looks like there's some put buyers here. So there continues to be put buyers. And, you know, my analysis of this, and I think this will make sense to you as well, is that the reason volatility is staying high is just because there's people out there, you know, fund managers who have made great profits this year being long these tech stocks. They want to protect those profits. So what do? They go out and they buy puts in the SPX. They don't want to actually sell out their stocks or sell out their SPX stuff because they want to collect the dividends as they come in. But they do buy some puts to protect stuff with. Well, options X, are you talking about why the VIX Central doesn't work? Well, the VIX expiration was a couple days ago, of course, and this morning was the expiration, of course, for some S&P stuff. But and that certainly was what caused the gyration of the Nasdaq. I don't know if you noticed the Nasdaq like bouncing around before the open today. A lot of that had to do with expiration. I don't know if VIX Central has information. One way you can check here is here. Let me pull up the screen here and show you. When you see, and I do this sometimes, I would welcome you to do it as well. When you see that VIX Central is not is like slow. That's the wrong one. That's me. You can actually go and you can ping the guy who runs VIX Central. You can ping him on. Hold on, I'm just trying to fix the screen here. Fit the screen. There we go. You can ping the guy who runs VIX Central on Twitter. So I'll show you how to do that here. So the guy's name is Eli Mintz, and so you can just go in here. Eli. It should pull him up pretty quick. Here he is. So you can just see if anyone's saying anything. It doesn't look like anyone's said anything to him lately, but you could just go to him and tweet at him, and he's usually pretty responsive. Our price is delayed. Seems slow. And be polite with people. But he's usually pretty responsive, and he gets back to you pretty quick if stuff's slow. You might have to go in there and tweak it for a second, but he runs prices off of a SIBO feed, and they're usually about 15 minutes delayed. I'm not quite sure why they're slow this moment, but there you have it. There's that. There we go. Yeah, so I apologize to everybody once again for coming on late. It was a bit hectic this morning. But yeah, I'm going to hang out with this short here just because it seems like the market just continues to rally no matter what happens. And that's kind of where we are. I don't know. You guys have positions on right now? What's up, Edward? Edward, sorry, sir. My profound apologies to you for wasting your time this morning, or at 1 o'clock. So there we have it. We'll see what happens moving forward here. Thanks everybody for watching, and thank you for your patience. Yeah, I'm gonna hang with the position for a while, see if we can make a little cash. It is very tempting just to get long. I was trying to figure out like what would be a good way to just get long some of these tech names, because everybody you talk to is like, oh, I'm gonna buy Apple ahead of the split. I'm gonna buy Apple after the split. And I think the split is coming up. It might be like Monday or something. So do you go ahead and buy some call spreads? The other thing I was looking at as far as VXX is opposed to like buying put spreads. What if you were to like buy, what if you were to go out to like March, right, and buy like the 20 puts in March, and you just straight out buy the puts. When I model them in under the Analyze tab, so if you just click it, right click and hit Analyze, you can kind of model it. It has pretty much about the same decay because it's far out in time, so it has pretty much the same decay as buying a put spread. And the beauty of it is you've got from 1580, because 20 minus the premium is 1580. You've got from 1580 till 0 to make money all the way down. Another thing would be to look at, instead of the March 20 strike, look at something that's a higher strike, like maybe the at the money strike, or even like the 26 strike. And you're just long straight out the puts, which is a similar way to do it, kind of. Thanks, Dasbuff. Yeah, I thought it was the 24th Monday for the Apple split, and then Tesla the week later. I mean, Tesla's just made such a huge move. I know, there's one thing I know for a fact. If I buy Tesla right here, it's going straight down, right? I know that's for sure. So not crazy enough to do that. But there was a guy who was talking about being long 10 of like the 1,700 calls or something crazy like that coming into today. It's up another $90 today. Just unbelievable. But will Apple, is Apple, as soon as the day it splits, are people going to rush in and just buy more? Probably, right? Because a lot of investors today are they're kind of new, and they just see it go straight up, so they just keep buying it. And it seems to be what's happening right now. There's going to be an awakening at some point. The market doesn't act the same way forever. It acts the same way for a little while. It can act the same way for a long enough time so that you forget the way it used to be, but then it switches gears on you, and all of a sudden it's different. And those who are able to sense the tone shift and adjust are the really successful. Yeah, exactly, Dasboff. Right. I should take one for the team. I'll put all my money into Tesla, and then you guys just all buy puts, and then I'll have no money, but I'll be popular on YouTube. So I guess is that more important than having money? I don't know. So I guess I saw something that said that Tesla is it's worth the PE ratio is over 1,000 for Tesla right now. So just shows how out of this world the price is. It's worth more than Walmart now, which is pretty amazing. But so there you have it. I'm sitting here I've just been sitting there watching my my VXX, waking up in the middle of the night. Now that I'm short, I'm ready for the market to just, be down 500 or something. The whole time I've been playing for it to be, playing to the short side. I wake up every day, like it starts to go down. I'm so excited. I'm like, yes, it's going down, and then it just stops and ramps back up. So, in all seriousness, you can't think in your head. I like to think of, what if I had the opposite position on? How would I feel about it? What would I think about it? I think about that a lot. In all seriousness, the market doesn't react to what position you or I have on. It's us getting in tune with what's going on with the market that makes us money. All right, so thank you for watching. Hello, Marcella. Nice to see you. Hi, Warren the Masses. Yeah, exactly. Walmart's got, but the stock market, it's a popularity contest, and we know the stock market is whacked because the economy is not doing so well, and the market is. So that should be evidence right there that the market's wacky. But the key is to figure out the game and win at it, and I hope for you win and victory and money. Fortunately, it's been a good week here, and I wish the same for you. All right, thanks for watching, thanks for waiting, and see you next time. You're watching Famous Game. Have a great weekend.